Welcome to Risky Ryan Trades. So today we're going to be talking about the possible market crash that we're going to get next week. At least going into the weekend, it sure looks like there's a great chance that we could experience some volatility. Now, as you probably already know, I'm filming this Friday night. This will probably get up on Saturday. Israel, Iran, they're fighting each other. I think I just saw Israel got hit with a hypersonic missile. So things are obviously escalating. I don't think they're going to de-escalate over the weekend, but who knows? I mean, Elon said that Trump was on the Epstein list, and then in 3 days he deleted the post and everything went backwards. So anything in this world can happen. However, in this video, we're going to explore what I could definitely see happening next week, or potentially maybe the week after that. I think the process, if it's going to happen the week after that, the process will begin next week. So let's just dive into the charts. What we're looking at right here is the S&P 500. You can see we're sitting right at about 600. This is the SPY. 6,000 is probably the SPX. You'll see here that we have a gap in the weekly chart. And there's a saying in trading, all gaps fill. I've been looking for this thing to fill, and we never got it to fill. I think that there's a really good chance that this thing fills next week. And that would be a drop in the S&P of about 6% or so. In my portfolio, that would probably translate to a 10%, 12% drop. Probably 12 to 15% drop, to be honest. So we need to prepare ourselves and think about what we're going to do if that happens. For me personally, this is not financial advice, but what I'll be doing, this level right here, 558, do you see this line right here, this moving average? This is actually the volume weighted average price, the VWAP, from the top, from the all-time high. A retest of that with confluence of the 0.618 Fibonacci level and filling the gap, this feels like there's a magnet wanting price to come back to this, and it just is looking for an excuse. And war is a great excuse for this to happen. I'm going to pull these moving averages out so you can see it a little better. But yeah, right here, this is what I'm looking for. And if I pull up the Ichimoku, you can see that the Tenkan-sen next week is going to be right there. So there's going to be three things right there waiting for a retest to occur. One way that I played it, and actually I lucked out. I'm not going to pretend like, I have a crystal ball, but this candle right here, I bought the VIX. I bought a option, a 21. It was out of the money. It was a 21 call for 2 weeks from now, which will expire somewhere over here, hopefully up here. Now, that is one way to hedge your portfolio, as opposed to just trying to sell all of your stocks and then try to jump back in at the right time. You never can predict the market. So I prefer to hold all my stocks through all of the ups and the downs. But if I feel like we are overdue, which I did feel like we were overdue, we lucked out with the whole Trump Elon thing. And even before that, on a technical basis, I was looking for, just a retest of some levels that never seemed to come. And so I felt, and then once they were talking about Iran and Israel, and there were like rumors about that, I said, yeah, I'm going to buy me some insurance. Just 2 weeks out, I think it was June 21st is when the call option expires. And boom, it's already paying off. I actually think that you're going to see this end somewhere between 25 and 32 would be my guess. I think you're going to get to these levels next week. I really do think that's going to happen. And so if you do get a VIX above 30, you just got to start buying. I mean, that's what I think. I think the statistics bear that out as well. If you buy when the VIX is over 30 to 32, typically you're going to have gains 12 months out from that. Is this recording right now? Sorry, I'm an idiot. Okay, so this conversation made this video come to mind. So when the VIX is going to 30, this is what it feels like to buy. Like you're like, you want me to buy when it looks like the world is about to fall apart? Yes, I do. And the truth is, once you land in the water enough times, you're going to find that actually you'd much rather buy when everything looks bleak and like there's no hope and the market just crashed, much more than you're going to want to buy when the market's ripping and you're like, God, when is there going to be a 10% correction? So it takes some time to rewire the brain, because especially, if you're just a pretty casual trader, you're trying to get better, you probably watch CNBC, and whenever the market crashes, all the talking heads are like, oh, you can't buy, it's too risky, got to take risk off the table, got to take chips off the table and wait until there's certainty. The market bottoms before there's certainty and actually starts to move up before there's certainty. When there's big institutions, big fish in this game. I think the game is rigged, to be honest. And so, like the war in Iran, all these things, I think it's known by whales, and you can see them make moves. Sometimes the market will sell off before the news hits, sometimes days before the news hits. That's why I like to look at the charts as well as fundamentals, as well as macro, because sometimes you can see the news happen on the charts before the news actually breaks. One other thing that people do use to hedge, well, a couple other things people use to hedge. Gold is another one. It looks like it's going to try to break through 3,500. I feel like this is a great excuse for it to try to break through 3,500. US oil, another big one. I have Heikin-Ashi candles on here, by the way. Let's do regular candles. So you can see there's just a giant gap up today. So these are things that people buy when they feel like they need to hedge their portfolio. Typically, they go up when the rest of your portfolio comes down. So I know for me, I like the VIX. It's just simple insurance, I only bought one call, nothing crazy. It was like $100 per call, and 21 is my break even, 22 at expiration. But I think this is going to get up to 25, 26, 27, 28, 29, maybe 30 within a week, which every point above 21, I'm making $100. So that adds up, and then you can flip that around and then buy the bottom of the stock market, and it's like a double whammy. So anyways, stay calm. This was needed anyways. Like we really should come down and test the golden pocket, which is this 528 to 558 zone. We need to test the golden pocket. We had just a crazy run up, and now we're entering some seriously bad macro atmosphere. So I think it would be perfectly healthy for the SPY to come down to about 560, 558. And then hopefully the world sees peace and we are able to move higher. But I don't think the world's going to see peace. I actually think this is going to be just a great excuse to, let the money printer rip, lower interest rates early, things like that. We might see the economy start to crack or something, but who knows? No one really knows. I just, if these things happen, it's all temporary. By end of year, if it happens tomorrow, this big dip, we'll be higher by end of year. So I'll be buying the dips to the day I die, because that's just the safest time to buy. That's the weird paradox of this all, is like when you're way down here, that's the safest time to buy, not when you're up here. You don't want to be buying when you're up here, because you can fall like that. But once it falls like this, there's a limit technically to how much something could fall at once. I mean, there have been some crazy historical drops, no doubt about it. But, if you've already dropped significantly, you're probably a lot closer to the bottom than if you're buying all-time highs. And so I'd rather buy low companies that I believe in the long term, especially when they're dropping with everything else and it has nothing to do with their business. And, once things turn around, they just snap right back, like you see right here with the SPY. So anyways, thanks for joining me. Hope you enjoyed that video. If you did, hit it with a like. Leave a comment below. Do you prefer gold, oil, silver, buying puts on certain stocks, or calls on the VIX? How do you like to hedge your portfolio? And if you enjoy these videos, hit the subscribe button. Thank you very much. Risky Ryan, out.